All right, this question came in. I drive an electric vehicle and I use it for home health visits. How do I deduct the electric bill? I am a 1099 therapist. You know what that means? It's time for quad. And what is quad? Is question, answer, and discussion. So let's look at this question again. He is self-employed and he uses his vehicle for work. Okay, so he can deduct this expense, and we're going to see how he should do it. Okay, so the question is not if, because he can, but how. There's two methods to use that you can use to write off your vehicle expenses. You can use the standard mileage deduction, or you can use the actual expense. You can only choose one. You cannot mix and match. So in the standard mileage, you'll need a mileage log. And then all you do is you multiply your business miles times whatever rate the IRS has given for the year. In this case, it's still 65.5 cents a mile. All right, so it's pretty easy to calculate this. However, as you can see, there's no electricity, so you got to use the other method, the actual expense. You still need a mileage log, and you're going to need every single receipt. Okay, the IRS wants documentation for everything here. Gas, car insurance, every single repair, battery changes, tires, oil changes, lease payments. All right, remember, this is not 100% because you need to figure out the percentage of business use, and you can do that using your mileage log. There's also depreciation in the actual expense method, but I won't get into that because that's a little bit beyond the scope of this video. So when we're talking about electric vehicles, we're actually having to take into account the electricity used when charging at home. So I did a little bit of research, and I'm assuming the person is using a Tesla just to have an example. And the cost of electricity per mile across all models is about 5 cents per mile. So if you drove, let's say, 20,000 miles total and only 15,000 of those were business miles, then we just multiply 15,000 times 5 cents a mile, and we get $750 in the cost for the whole year. Now, that's if you charge the vehicle 100% of the time at home, and the IRS knows that's not very likely. So let's say you did it 90% of the time. So your deduction for the electricity for charging the vehicle at home is closer to $675, plus whatever other receipts you have, repairs, what we talked about earlier. So the question is, yes, you can do it, but should you use this method? Let's see, let's compare. With the standard mileage method, we are getting 65.5 cents a mile for a grand total of $9,925 deduction for the whole year, which is about $127 a month. That's a nice deduction. When we use the actual expense, we're only getting back 5 cents a mile for a grand total of $675. So that's only $57 a month. You would need an additional $770 a month in other car expenses to match what you're going to get with the standard mileage. So the winner in this case is the standard mileage. If you found this helpful, you know what to do. But it's always a good idea, yes, to run the numbers using both methods because things can change. So always have your mileage log. If you have a tax question, leave it in the comments or send us a DM on Instagram @therapy, not taxes.